Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Asian markets have opened up a slight bit on the positive side. Taiwan index is trading with gains of 0.6%.
Nifty support stands at 25,924, which is the 20-day moving average.
We create more value for the investors in the long run. So we believe that's the right way to think about this. Their intervention, or rather the gross activity, has gone down, the buy and sell over the last 6-7 months.
Markets have opened 25 points higher on the Nifty. The Sensex is starting in the green.
Every 1 rupee creates a EBITDA impact of 200 crores plus.
Nifty down about 108 points, Sensex down about 288 points as we speak.
The big things which Asian Paints does is that as part of Har Ghar, you can't just own surfaces, you have to own spaces.
We tend to speak about a rupee fall in kind of depressed notes, like a stock market fall. No, it is not. It also not just benefits exporters like IT stocks, it benefits the entire economy.
The story continues to remain the same. The rupee depreciation, falling markets, broader market weakness, and no respite. It can be seen so far.
Good afternoon, hello and welcome to Closing Bell. And here we are coming to you as always from the CNBC-TV18 Motilal Oswal studios. I'm Rupee, with me is Nigel. And it's been a bit of a hectic day for markets, for the equity market, for the currency market. And we've also got corporate action coming in from JSW Steel. So it's a packed 1 hour. Keep it with us. The ride is just getting started. Nigel's working his numbers on JSW. And we'll talk about that in just a second. But first up, it is a disappointing day for equities. There's no two ways, no other way of putting it. And a lot of it obviously stemming in from the uncertainty around the currency as well. So let's come to the Nifty straight away and see what's going on. What we're dealing with right now is about a 100-point drop. A while back, the Nifty actually slipped below the 25,900 level as well. Now it's trying to come above that. And this is a very critical mark because this is where the fight is around the 20 DMA. Now, if the bulls can at least defend this level, it will give some semblance of positivity. Otherwise, there's not much of it to find. The other issue with the market action today is the crunching fall in mid-caps. Look at broader markets. Look at what's happening to the mid-cap index. The mid-cap index is, as we speak, down about a whole 1%. Let's pull up the small-cap index as well. So broader market pain is very, very visible. The small-cap index is also down about 1%. And if you look at the advanced decline ratio, then it's very, very clear in favor of the declines. Lots of stocks are selling off. I'll just give you some examples. If you talk about the key losers, because this is the broader market pain that we're talking about. So a lot of PSU banks, PNB, Canara Bank, Indian Bank, Bank of India, a lot of these PSU banks are down. I remember yesterday there was clarification coming in from the Parliament Q&A that right now there is no proposal to increase the FDI limit above 49. Maybe that's become an excuse to take some profits. There are other stocks like Wockhardt, where there was good news coming in. Wockhardt rallied very, very smartly ahead of this big drug launch, the antibiotic launch that they're doing. Today is a day of complete profit taking, and many such other names that we'll talk about as we go forward. On the large cap screen, the only island that seems to be performing is IT. Maybe some of it is sentiment because of the rupee. Some of it could be just because of the fact that now you are getting slightly upbeat calls on IT. Brokers have been saying that there's some value here that's worth looking at. So Wipro, TCS, Infosys, these stocks are up and about. Otherwise, even for the Nifty, and let's pull up the heat map actually. It'll give a nice sense of what's going on the large cap screen today. Beyond IT and one or two bank names, there's not much to talk about. Let's see if we can get the Nifty heat map up in a bit. So a lot of stocks, BEL, Titan, NTPC, Tata Consumer, Interglobe. It's cutting across sectoral lines. It really doesn't matter. It's that kind of a session. And then there is JSW Steel. Stocks down 2.5%. Nigel, hopefully you've had some chance to breathe now. But it was interesting because this was not entirely unknown. The market was always looking at the possibility of JFE coming in as some sort of a partner on Bhushan.
Yeah.
What is your sense on what's happened?
Well, the problem is that the valuation, the EV that was being discussed or the buzz or whatever that is, that was in the vicinity of 45,000 crores to around 50,000 crores. Now, the equity stake is come in at roughly around, 31,500 crores approximately. you in all probability add a net debt to this. So it should be in the ballpark of around 38,000 crores approximately, which is much lower than what the street was working with. This asset, remember, in the first half of the year, the EBITDA number of this asset, BPSL, was around 1,500 crores, right? So the year you assume that it will be around 3,000 crores with a scaling up opportunity as well. So you say that if the deal is done at around 38,000 crores approximately, given that equity value will be 31,500 crores, add to that the debt, which makes it an EV of around 38,000 crores odd. It is still not very, very cheap. It appears like it's at around 12 times approximately on EBITDA, current EBITDA. But there is a optional value where they can go ahead and scale up this capacity as well. So the asset is good. So for the time being, the street at around this 38,000 crores of enterprise value will not be happy, because the buzz, the expectation was it will be more than 45,000 crores. Some were even talking about it being at around 50,000 crores. All the other details that are flashing for you on the screen, that's, there's a lot of information being put out there. Short point is JFE will be picking up 50% stake for around 31,500 crores of equity value. They'll be paying around 15,750 crores approximately. And the enterprise value is relatively lower in comparison to what the street was anticipating. So that's the first take on this asset. And the EBITDA for the first half of the year was 1,500 crores. So on an annual basis, it'll be a little more than 3,000 crores.
So I think that we'll discuss this in greater detail as we go along. But as what you explain is that essentially why the street seems to be disappointed is that JFE has gotten the asset at a bargain price. And maybe the street was hoping that it'll be a better pricing at which that this deal actually happens in terms of the equity component that JFE is putting in right now. More on this, we'll get some analysts on this as well as we go along. The other story, before we get to our technical experts on the show, is the rupee. Let's quickly flash what's happening with the currency right now. So we are at levels of about 90.13. I mean, we've had a marked deceleration. At one point in time, the rupee was down almost 0.5% for the day. Now there is some semblance of a recovery, but closer to about 90.29. That's where the day's lows were. Let's see what happens in the next 1 hour. So let's straight away get to the trading strategies now. First up, we have Mitesh joining in. Mitesh, a lot of moving parts and a disappointing day. I mean, look at what's happening with the broader market. So your first thoughts on the index and then specific stock ideas.
Good afternoon, Rupee. I've said that we will possibly look at consolidation given the fact that now 26,300 has become an established pivot on the upside. And the markets, should try and do some range between 25,850, 860 on the downside to about 26,300. And now we are getting close to the lower end of the range. The idea is that if this doesn't break, then I think this consolidation might well extend for a couple of few more days, and then we might see that upside breakout. But in case we start closing below 25,850, 800 levels, then I think another 200 points kind of decline will happen before a serious comeback can be more. So in that sense, I think I'm keeping a close watch on the index as we get close to 25,850. And on the stock side, I have one buy and one sell. Varun Beverages is a buy with a stop at 469 for targets of 495, and Gas Authority. A couple of days back, there was a bad news. It bounced back from 170, 171. But if it breaks 169.5, I think it will be a breakdown. Sell then with a stop at 172.5 for a first target of around 162 to about 161.
Okay. All right. Got that, Mitesh. Thanks very much. Mitesh, just because it's a stock in focus, it's a news on fundamentals. But anyway, just quick technical check on JSW Steel.
So I was watching that. I think that fall happened very fast, and the stock has some weekly supports around these levels of 10 to about 1100, and we got a low for around 1104. So in case we start breaking below 1100, then I think the stock could correct more. There's certainly a chance of that happening because the daily indicators have, with today's fall turned slightly negative. So if people are holding, I think they should use 1100 as the stop loss. And if they get a bounce back before the 1100 level breaks, then I think, try to exit close to about 1160 or at least.
Okay. All right. So we'll keep those goalposts in mind. Thanks, Mitesh. We'll come back to you a little later. For the time being, let's introduce Sudeep Bandyopadhyay into the conversation. Good afternoon, Sudeep. What a day, Just when you think we had those all-time highs and the market momentum completely fizzling out. We'll get to all the stocks, but let's start with the newsmaker right now. JSW, what do you make of the transaction? Nigel just explained that the pricing seems to be a bit of a worry for the market.
Oh, absolutely right. I think, the expectation was of a much better valuation. And on the back of that, I think JSW had moved up also. Unfortunately, the valuation isn't what the market was expecting. It's kind of, I would say, that's probably the perfect value. No premium or nothing extra is coming to JSW Steel. I think that's probably the little bit of niggling worry for the market. Also, we don't know exactly what's going to be JSW's shareholding, because in BSPL, promoters also had about 13-14% shareholding. So is it who's diluting, how much they're diluting? We need to know that to ensure understand fully the transaction. But on the whole, I would say from the this is probably a little bit of a knee-jerk reaction. Eventually, this is good for the JSW Steel Group. They're getting a strong partner with expertise, and a little bit of value unlocking is happening. Liquidity is improving for the business also. So I don't think it's too bad a transaction. However, of course, market has been little disappointed, and that's why we see the correction.
Absolutely, and I think that's going to be a point that will continue to be debated over the next couple of days. Whether it's like, I mean, you're getting a big international partner with reasonably deep pockets. So then if you give in a little bit in terms of just the valuation and pricing and the equity piece, whether it's a good bet to take, strategic bet to take, or whether it proves to be disappointing.
No, JFE already has taken JSW Steel. They've already hit their upper end. That happened more than 10 years ago. So is this an indirect way where JFE, this is these are all the questions that I'll be asking the management later today. JFE already has taken JSW Steel. Now JFE is picking up a stake in one of their subsidiaries, which is BPSL. Yeah. They'll have 50% out there. At some point of time, will they reverse merge it into the listed entity? And then that'll be indirect way of JFE increasing stake as well. So the money comes in, but the street is wondering, first the street is being by for rationale. Why did they do something like this? Do they want to bring down the debt? What will the promoter holding be in BSPL, after this?
How much the listed entity, how much JFE?
What will it be?
Yeah.
Or is the promoter entity moving out? They have that 17-18% or thereabouts. So that's something that we're waiting by for. And ultimately, what is the plan? To fold this unit back into, JSW Steel. And that's the way that JFE indirectly will go ahead and increase their stake. We'll wait by. We'll have an analyst who will be joining in soon as well. But JFE has been holding on to that stake. The last few interactions that I've had with JSW Steel as well, my last question has always been, is JFE coming in directly or indirectly? And they have been saying no. So this is, this was why I was asking that question for the last few times.
So a lot of bigger strategic questions that still need to be addressed. And I'm sure Nigel has his list ready for the press interaction that's going to unfold a little later in the course of the day. That's JSW Steel. But let's move on to the other.
JFE has 15% stake as of now. Sorry.
So 15% stake in JSW Steel, the listed entity.
Yeah.
Now we need to see what their plans are with respect to Bhushan Power and if there's some sort of a reverse merger, if that's what they're thinking right now. So we'll get to it as we go forward. The other big story of the day, obviously, has been the rupee slip and slide. So let's bring that chart back up. The low came to closer to around 90, 28, 29 almost. And from there, it's pulled back a little bit. Lata is here. Lata, I'm sure the last 24 hours have been a complete whirlwind for you as well. Dealers, rupee experts, onshore, offshore. What sense did you make of all of it?
Well, actually, the rupee has been falling from November 18th, the day when the trade deficit for October was announced, and it was an all-time high of $41 billion. Since then, the fact that the trade deal hasn't come has kept rupee bears up and about. And we saw a huge fall today, more because of the psychological 90 rupees per dollar barrier getting crossed. Though technically it's just one other number, but it was a good 1% or an over 0.5% fall today. The point is now in late trade, it appears like there is selling exhaustion. I mean, it's a typical way in which how bear markets normally end. I hope I'm not speaking too soon. But how much will you sell on the same news? And the market, came to terms with the idea that we can't go on selling at this point, and they have probably taken this protection from that statement that the CEA made, that the government is not losing sleep over the rupee's fall, and probably this is the best time for it to fall because there are tariff walls coming up, and this makes us even more competitive, was what he seemed to be hinting. And the important point to note is that the RBI was supplying dollars earlier in the day, but at no point it was supporting a level. Or protecting a level. It was the selling intensity was always very weak of dollars, but it let the market find its own level. The recovery from 90.29 to 90.11 or thereabouts has not come because of a huge supply by the Reserve Bank, but because the market appears to think that, we have done enough and there has been a long dollar unwinding and probably covering of rupee shorts, or maybe even exporters coming in and selling at that 90.29 level. That is very important, that the market takes cognizance and there is an exhaustion of selling. The market is now convinced that RBI is of the view that we should allow the market to correct itself. A cheaper rupee is good because it will mean lower trade deficit. Exports will become more attractive, and more importantly, the economy gets protection from imports. I mean, you can ask steel, since we were discussing steel earlier today. For a steel company in India, nothing is as good as a rupee depreciation because Chinese steel becomes, imports become expensive. So the market needs to veer around to the view that a falling rupee is not bad. President Trump has been asking for the dollar to come down to 90 or 89 or thereabouts. His big complaint was that the dollar was expensive. And likewise, a falling rupee actually is a protection to the economy. It is not just, IT stocks or specific stocks. For the economy as a whole, it's a protection. It is almost like a rate cut.
I wonder if President Trump is watching the rupees fall today, and then if he understands the FX markets and what you just said, then he might be thinking, oh, is this some other way
of... We call it currency manipulation.
Yes, exactly. So we're trying to preempt the next set of posts on social media platforms. But thank you very much for explaining that to us, Lata. So there we have it, the Indian rupee, and it seems to have found some sort of a semblance. There's no runaway move to 91. The market seems to be fairly balanced, at least at this point in time. But what does this move on the currency? It's been a sharp 5% sort of a move over the last couple of months. What does it mean for a lot of the individual companies, both importers and exporters? We have Sudarshan joining in. He's been running through the lists and what it means for EBITDA. I think the statement from Bajaj Auto was interesting this morning. Where Mr. Sharma gave us a number. Every 1 rupee fall, we get 200 crores additional EBITDA.
So 30% fall in 10 years, 18% fall in 5 years, 5% fall in 1 year, and in the last 2 days, the kind of fall that we have seen in rupee, and the record low for rupee is 90.29. We have seen a minor recovery from that level, and currently it's at 90.11. So now we have tried to find out how this will have an impact on certain sectors. So to certain sectors, it will have a positive impact, while certain stocks will be impacted negatively. So on top of the list, one sector that is trading with gains today is the IT sector, because rupees fall will have a positive impact on majority of the IT names, because they have a huge exposure globally to both US and the Europe, and revenue that they generate or they get is in dollar. So any fall in the rupee will have a positive impact on their margin. Next sector comes to the mind is pharma, where the impact will be limited because majority of the companies go for hedging when there is a fall or appreciation in the rupee. But one negative impact can be seen here is the increase in the input cost because of a fall in rupee. And input cost form majority part of the sales. For most of the companies, the range of input cost to total sales is in the range of 40 to 60%. Now next is auto sector. Two-wheelers name. Two companies that will benefit the most. One, TVS Motor, because 30% of their total volumes come from exports, and to total revenue, 25 to 26% comes from exports. So they will be impacted positively. Next is Bajaj Auto. 50% of their revenue comes from exports. In Q2 FY26, dollar realization for them was 87.10. For Q3 FY26, I did the calculation for last 2 months, and average comes to around 89.10. Now, while talking to CNBC-TV18, management did say that if there is a 1 rupee fall, then it impacts EBITDA, annualized EBITDA positively by rupees 200 crore. So now for Q3 FY26, benefits can be on EBITDA in the range of rupees 350 to 400 crore for Bajaj Auto. For auto ancillaries, I have taken 3 names: Uno Minda, Bharat Forge, and Samardhana Motherson, marginal positive impact. Bharat Forge, hugely positive. For Uno Minda, negative impact. Oil and gas, it would have a mixed impact. For Reliance, it's a mixed impact. For other companies, CGDs, it would be a negative impact. In the chemical sector, it would impact positively because, like IT, these companies have a huge exposure, like the SRF, PI Industry, Atul. All these companies will be impacted positively.
Okay, so all right, got that. Very exhaustive list. So thanks very much. It's quite helpful. just a quick check in terms of who benefits. So it seems some of the auto ancillary companies, the auto companies, IT, they are straight out beneficiaries, where it could be a little more mixed for sectors like pharma or energy importers like, say, Reliance Industries. Anyway, let's now move on, get back to Sudeep. Sudeep, let's take up some of these sectors, starting with IT. IT, in any case, like I was saying earlier, a couple of brokers, CLSA, Motilal, I mean, they've started issuing more optimistic calls now on IT, saying there's value, there's the currency tailwind, and maybe, eventually revenue growth will also pick up. Do you agree? And if yes, give us some IT names that you would buy now.
Well, currency tailwind is definitely real with the kind of depreciation we are seeing. Definitely, these large cap IT companies, which have roughly around 50% of their revenue coming from US, definitely improves their EBITDA by the sheer force of the currency depreciation. But having said that, I'm not too excited about the prospects of IT. At this stage, there are still many challenges. The US, irrespective of whatever we see and hear, the reality is large US corporates are still a little cagey, hesitant about awarding new contracts or large contracts. They are holding back. They are probably wherever they can give a contract of 100, they are only doing 50 at this stage. They're slowing down execution. So there is definitely challenge as far as order book is concerned. There is also pressure on margins for Indian IT companies. The corporates are insisting on use of AI and benefit out of AI, whereas unfortunately, large Indian IT companies don't have their own AI models. They depend on third-party models, and their cost benefits don't really work out. So margin pressure on these companies is also real. So as far as I'm concerned, and I've been saying this for quite some time, I will focus on segments like travel and tourism, where there is a lot of excitement world over, and look at picking up IT companies which are catering to travel and tourism. Or in the automobile, that ICE to EV transition, a lot of IT companies are working in this space. So pick up companies which are working in this space, because the scope for work is continuously increasing, and the margins are good because this is a fast moving and fast evolving and growing segment. So RateGain Technologies, Coforge, Persistent Systems, maybe Tata Technologies, these are the companies which I will definitely look at.
Okay. All right. So that's as far as the rupee-related moves are concerned. Let's take a look at some other stocks that are up and about. Like I said, in the broader space, there is plenty of pain and pressure. And it's these PSU banks that really stand out. And the cuts range between 4, 5, 6% in many of the cases. These are also stocks that have had a great one-year run. I mean, if you look at, for instance, Canara Bank, which is down 4.5% today, stocks up about 40% in the last 1 year. If you look at something like an Indian bank, which is down 6% today, ditto, 40% up in the last 1 year. So there's profit-taking and sharp profit-taking that's playing out today. Sudeep, any advice here, PSU banks?
Well, I love PSU banks at this stage. Believe me, the valuation gap is glaring. Look at, let's say an NBFC like Bajaj Finance. See what is the kind of price to book it is quoting at 5, 6, 7, depending on the market, depending on the value, where we are talking. But look at SBI, the largest PSU, it's quoting at 1.1 book. So there is a significant valuation gap. I'm not saying they should be exactly identical, but this valuation gap has to get bridged in one way or the other over a period of time. So definitely PSU banks need to be picked up for long-term portfolio building. Even if you are not interested in picking up SBI, which I think we should, look at these smaller PSU banks. We love Bank of Maharashtra. I think leave aside the government disinvestment and related volatility, but pick up Bank of Maharashtra. It's a good bank. Valuation is very good. Pick up, let's say, Central Bank. Valuation is very good. And these doesn't depend on government's plan to merge, consolidate. These are independent actions which government may or may not take. But valuation-wise, they're definitely worth picking up.
Okay. All right, Sudeep, thank you very much. Good to have you on the show today, and we look forward to connecting again soon. Thanks for joining us this afternoon. Need to take a quick break. We'll come back on the other side, keep tracking the market. We'll have Pashupati Advani joining in for some fresh perspective. Welcome back. Rounding up to 3 o'clock, and in a bit we'll have Pashupati Advani joining in. But before Pashupati joins in, we have Manglam joining in because Nigel's hopped across to get to the JSW press conference, which promises to be a very, very interesting one.
Yeah, we'll watch out for how that pans out. You know, the kind of questions that we'll pose to them, the kind of clarity that we'll get. For now, the stock is slightly under pressure post that deal was announced, holding with a cut of 2%, but that's pretty much what the market is. The good part, however, is the kind of recovery that we've seen, especially coming in on the Nifty bank because of 2 or 3 private banks. The largest weight of them is HDFC Bank for as long as it stays. You know, HDFC Bank, obviously, we're doing a rejig on the weight on the Nifty bank soon. So HDFC Bank has moved higher, and that by itself has caused the Nifty bank to now be in the red by just about 35 points. So chances are a few more sentences that we speak, and we will obviously see the Nifty bank move into the green as well. The Nifty currently is sitting with a cut of almost 0.25%, which is, again, a good recovery of almost 100 points from the lows that we've seen. But what are the top movers that we have in the market in this hour? Hormaz joins in to tell us more. Hormaz.
Trying to find some optimism within the broader markets, and so we'll start off with some gainers today. And even if the mid-cap index is down, Sonata Software is holding on to gains of around 5%. Another potential beneficiary from the rupee weakness. The volumes today are the highest in over a month. We've had close to 70 lakh shares that have been traded already. The 20-day average here is around 6 lakh shares, so 10x in comparison to the 20-day average. The stock is now at a very important level. The 50-day moving average at 366.7. That is where the stock currently is trading at, and has been an underperformer all through 2025. Down 40% so far this year, was down 20% last year as well. Indian Bank among the top losers within the state-run lenders today is 5.5% lower, still holding on to the day's low, down almost 10% now in the last 2 sessions. Volumes today are already double of yesterday's number. Today's volumes are already also the highest since June of last year. Had 60 lakh plus shares that have been traded already on the stock. The 20-day average is around 11 lakh shares, and the stock is broken below a very important level, the 50-day moving average of 817. Why is that important? Because it has not closed below that level since the month of July, but it had been among the best performing PSU banks this year, and not only in this year, over the last 5 years as well, because from 80 rupees the stock had moved to almost 900. Aztec Life is back in the list of gainers today after a 5-day losing streak, around 6.75% today, 13% in that last 5-day losing streak that the stock had. The rebound today, though, is not on very significant volumes as the gains were before this losing streak. There are almost 50 lakh shares that have been traded. The 20-day average is around 33 lakh shares. It took support at its 100-day moving average and has rebounded from those levels. And lastly, Capital India Finance is the 3rd straight day of gains for the stock. The highest volumes on record in today's session. Close to 2 crore shares have been traded today. 20-day average of around 3 lakh shares. The stock back above key moving averages and has also managed to trim some of its losses on a year-to-date basis.
Right, Hormaz, thanks a lot for that. And when it rains, it pours. Right now, as we speak, there is an exclusive that has come in from our colleagues. I believe this is Yash. We'll shortly get him for a link as well. He's saying that the SEBI will likely consult exchanges on suitability criteria for F&O access. So up until now, the question was whether there will be weekly options expiry or not. But for now, there is some clarity or some belief that maybe weekly options expiry stays. So how else do you curb the sort of excesses that are taking place in F&O? Maybe for that, the SEBI will go ahead and issue a consultation paper which limits the eligibility of people who are able to trade in F&O so as to reduce a lot of the risk-taking abilities that people would have. So maybe you will have something like a direct or indirect equity exposure and the size of that as criteria for F&O trades where the speculative...
That's underlying cash market exposure.
In some form or the other, I guess, Yash will be best placed to that but theoretically speaking, there are just 3 things for which F&O is traded. One is hedging, the other is arbitrage, and the third one is speculation. So the speculating part is what the SEBI may want to curtail, and for hedging and, arbitrage, you would obviously need a counter position in cash or not. As of now, we've seen an impact of that on the BSE. Remember, the stock has been under pressure all through today's trading session. But if you pull up a 1-month chart, it's rallied from around 2480, 2490, all the way up to 2800. So it's not that the stock hasn't moved higher as well. So which is why on the basis of this news, there you have it. A 1-month move is 8%. So it's sitting on gains. But after this story, the stock has extended its cuts, now sitting with a cut of nearly 3.5%. And Angel One, which has always been under pressure in today's trading session because the weakness that came by in their last month's update, is, still sitting with a cut of almost 4%.
Yeah, absolutely. In Angel One, anyway, I mean, their monthly update was not that great, so that's an added issue. But I think we've got Yash joining in. We also have Pashupati. Pashupati, in fact, okay, Yash will come to us in 2 minutes. Before that, if we can get to Pashupati. Hi, Pashupati. It's a bit of a perfect storm, right, today. We have the rupee, we have a corporate deal breaking, and then we have, our own story on what the exchanges, or what the regulator, rather, may do to tighten up some of these norms and curb speculation, which continues to be one of the biggest talking points, I think, from SEBI's perspective. But first up, on this whole rupee business, Pashupati, would you link today's fall to the slide in the currency? I mean, how should we read life at rupee at 90?
Well, we've seen FPIs and OFSs coming, quite rigorously, and that has seen money going out of the country at 86, 87, 88. So, it's continuing to go out. I'm not seeing money coming in. And, somebody made a comment to me that on all the new issues, they should put in block letters on the front page that the OFS is how big versus the issue being that big, because people are feeling that the OFSs are now getting bigger than the new money for the company. So obviously these things are all telling a toll, but I don't think the story ends there, because the story also ends with the uncertainty of the trade, tariffs with the US, the things that are going on in US, particularly in AI, and what that means for our IT companies. Today they've turned up, but I think that they've been hammered quite a lot in the last few days, and will, in my opinion, continue to be hammered. So, it is sort of cautious times, I would say. Surabhi?
Right, Pashupati, it's cautious times, but at the same time, the companies that are coming out with their paper, OFS or fresh, whatever be the case, it's the sectors are sunrise. The growth runway is fairly long, and oftentimes the ones who are offering their stake aren't offering the full stake. So they are, holding on to some, and in many cases, they're also doubling down in the anchor book after what they've invested earlier. What do you make of that?
No, those are the ones who are here to stay. But the reality is it is quite, what I'm seeing is a lot of outside money going back. And, maybe it's the US that's attractive, maybe it's Europe that's attractive, maybe it's another set of countries. But basically, I'm seeing, we've had a really vibrant market, and so it is an opportunity to walk away. Plus, there are mumblings from China that things are turning around over there. So a lot of our money will probably, take a breather and go into China. So, India funds will move to China funds, and India and Asian funds will shift from India to China. And I think I'm seeing a little bit of that as well.
Okay. All right, Pashupati, just hold on. We just want to address this story that Yash has broken a while back on fresh curbs to, limit speculation in the F&O market, particularly when it comes to retail investors. Yash, explain this to us, because when you want to dabble in F&O, you always need to cuff up margin. That margin requirements are always there, and there's been enough speculation on whether those margin requirements also might go up. But you're saying that there could be a whole new entry criteria, whether I, as an investor, can enter in the F&O market or not. So just explain this.
Well, exactly. The main intention from market regulator SEBI, as we understand at the pretext of it, is to safeguard retail investors when it comes to the risks and, risks which they don't understand of the derivatives market. What we've been given to understand, and it's been some time, that market regulator is discussing the concept of eligibility criteria itself, which essentially, restricts or allows an individual to trade into derivatives market. Under the eligibility criteria, the most discussed point right now amongst, of course, SEBI is to consider, making an individual furnish his equity exposure. This could be through mutual funds, this could be through PMS, this could be through direct equity exposure or SIPs. All put together, what is the equity exposure that a particular individual has, and only if that equity exposure is beyond a threshold which is likely to be decided by SEBI, then he would be eligible to trade into equity derivatives. This is currently being discussed so far, of course, within the boundaries of market regulator SEBI. What we understand is that this soon could be discussed with stock exchanges in terms of how to really decide this particular threshold. What will be this threshold, which if crossed by the equity exposure of an individual, he would be allowed to trade into equity derivatives. And then there could be a consultation paper on the eligibility criteria for individuals to trade into equity derivatives.
All right, we take that point. Like we said, hedging, speculation and arbitrage, hedging and arbitrage stay. Speculation is something that SEBI wants to curtail. Will be very interesting, Rupee, because the point that you made, there is margin which is required upfront for trading in FNO already. My sense would be logically, I mean, from an exchange standpoint, this will obviously be negative because a large part of the volumes, a large part of the revenues come in for the exchanges, and that's something that we're seeing on the share prices as well. But what would be theoretically important to know when you're talking about the threshold is that for options there is something known as a delta, right? The rate at which the price of the option changes basis the price of the underlying. On that they can put that threshold. Delta could be that threshold. But for futures where the delta is 1, where the underlying changes just the way the futures changes, how do we put that threshold, and what threshold is good enough or what isn't good enough is something that'll be a very interesting one. So just as a market observer, this will be a very interesting conversation to watch if at all that comes by.
I hope it's as nuanced as what you're saying, that it's on certain positions or the delta or certain parameters. I hope it's not a blanket thing, because I can already sense the debates raging on social media. If it's a blanket entry threshold that Mangalam should have at least a 1 crore cash portfolio.
Not in this lifetime, for sure.
Cash market portfolio before he can do FNO. We don't trade anyway, so that was just a, in a lighter vein. But essentially, we need to see how this plays out. Pashupati, let's get your sense. Capital market stocks. In the earlier part of the year, they were very good wealth creators, and all this regulatory turbulence. I mean, do you still like anything? Do you own anything?
We obviously own. We're not exiting the market. We have to have something. But it's been tough, and I think that you can count the number of people who've made money this year on the fingers of 2 hands or maybe even 1 hand. Because I saw an article with all our big friends who have large portfolios, and all of them are in the red this year. So it's not a good situation, and if you don't make money, you're going to run away from the market. And I think we're getting to that point where people are getting a little bit sort of antsy, I would say the right word is, and they're moving away.
You have any buy tips, Pashupati, before we let you go? Anything to buy in this?
Sounding very pessimistic. Pashupati pessimistic. That's what we call you today.
Well, no, I don't think that. I think there are obviously going to be values. See, I actually believe that the government is going to continue to spend, and we have to be in infrastructure, but it's not going to be a here and now deal. They are going to spend, they're going to spend. We have to be in cement, we have to be in steel, we have to be in aluminum, precious metals. Those are the stocks. That's the half of the index that's going to drive the whole market. Now, it will go up and down, but the reality is we need all these commodities for our growth. The government is fueling it. Private companies are also coming into the space. So that's where we have to just buy and pray, I would say.
All right, buy and pray. It sounds like some of that is rubbing off on the markets right now. The Nifty has reclaimed that 26,000 mark. So that's the headline for this hour. Thank you, Pashupati, for joining in. You put some pessimism, but you put some optimism as well. The Nifty is actually just about breaking into the green, as is the Sensex. The Nifty Bank, when we just, spoke about 5-7 minutes ago, the HDFC Bank stock doing extremely well. The Nifty Bank is now fair and square in the green, almost 120 points up in the green. HDFC Bank is the one which has crossed the 4-digit mark in today's trading session, taking the Nifty Bank higher. The Sensex is in the green, the Nifty just about 35 points in the red. Good time to get in D Street chatter. Nimesh joins us now. Nimesh, there has been a good recovery from the lows. What's your sense? What's exactly happening in the dealing rooms?
Well, Mangalam, it looks like it's a bit of a surprise that we've seen a sharp recovery in the last 15-20 minutes of trade. Why I'm saying surprise, because the pressure in the last few days is largely dragged by the FI selling. And even today, the sense is that there is selling pressure from larger FIs, especially in the broader market. So that's been a big underperforming space, and that continues to see a lot of pressure, and there is a lot of pain as well as far as the broader markets are concerned. Today, for specifically, the PSU banks are under pressure because there was enough clarity that there is going to be no hike in the FDI limit, and that's the reason we have seen a bit of profit booking there after some bit of rally in that space. So that stands out in today's market. But I guess, while Nifty is in a bit of a recovery, I guess the bigger story is the pain in the broader market, and that seems to be still not ending or not abating. So that's a real pain point. If you ask any dealer or a trader or an investor, the cribbing point is that while Nifty is at all-time high, close to all-time high, their portfolios are down 15, 20, 30, 40%.
Take that point. And what about the interesting stocks that you have today? Any more large trades likely?
Well, that is likely, but the first stock on my list today is Kiri Industries. After a long time, some traction on that stock. It's up 6% in a weak market. And for the last few days, there is a bit of accumulation as well happening at HNI desk. And for Kiri Industries, the big trigger to watch would be as and when they get the money from the Dystar stake sale. The legal formalities are over, only the inflows has to come. So that's something to track as far as Kiri is concerned. The second, a couple of Adani Group stocks. Again, it stands out because after a long time, though small, but there is delivery-based buying in Adani Green as well as in Adani Power today. More so in Adani Power, but for Adani Green, also the fact that there is a large block anticipated in the next few days. So that's something to track there. The third name is Semi India Projects, which is erstwhile ITD cementation. For the last 2 days, the stock is under pressure, but overall, if you look at this year, the stock is relatively outperformed the broader market names. And the big buzz for this particular company is that they're likely to bag a very large order very soon. So that's something to track in Semi-India Projects. And the last is Aeroflex Industries. Again, a small stock. There is a bit of institutional holding as well, but I understand the company is likely to raise further money via QIP very soon. It's a small amount they're going to raise, but nevertheless, fundraising is on the corner for Aeroflex Industries.
Okay, all right. Nimesh, thanks very much for all the buzz as always. We'll take a quick break on that note, come back on the other side, and we'll, of course, get to the final trading calls with Mitesh, and we'll have Mayuresh Joshi join in with some final fundamental ideas.
Well, there is important update coming in on the Sanchar Sathi app. The government has removed the mandatory pre-installation of the Sanchar Sathi app. Remember, once this was announced, the pre-installation of Sanchar Sathi app, there was a fair amount of backlash, concerns around data protection and privacy, etc. So yesterday afternoon, we got the news that the government has actually allowed for people to delete the app once it was, installed. But now the mandatory pre-installation of Sanchar Sathi app itself has been removed. So that's the latest that we have on that one. Obviously, we heard from a bevy of experts as well as the telecom minister himself on the views around the Sanchar Sathi app. But now what we know is that the government has removed the mandatory pre-installation. So that's positive. Just keep an eye out on the markets though. There has been a stellar amount of recovery. The Nifty just below that 26,000 mark. But, the recovery in the private sector space, private sector bank in particular, has been notable. We've been speaking about HDFC Bank. Take a look at ICICI Bank. Remember, these two stocks were most sold in yesterday's trading session on fears that the weightage on the Nifty Bank being capped would lead to a lot of stock outflow and passive fund outflow. But today they're bouncing back in style. So ICICI Bank, HDFC Bank, Axis Bank. In fact, all through the first half of trade, we had the IT stocks which were outperforming, contributing the most to the Nifty. But the second half of trade so far, the recovery has been led by the IT not falling beyond, its highs through the day, and the private sector banks coming up as well. So, and that's something that we can see in the contribution chart as well. Earlier it was TCS, Infosys, Wipro. Now it's ICICI Bank, HDFC Bank, TCS and Infosys. That means that the Nifty's cut is just about 50 odd points. Let's get in Mitesh. He's with us for the tomorrow trade. Mitesh, there's been a good recovery. What's the trade for tomorrow?
I think, I'll go with a couple of long positions. Dr. Reddy has come on my radar. I think that's closing well. Take a BTST here at the stop at 1270 for targets of 1300 or 1305. And APL Apollo, I think that's a stop. It's correcting now. It's trying to reverse. So that's a BTST as well. Keep a stop at 1739 for targets of 1766.
All right. So that's the tomorrow trade coming in. We also have Mayuresh Joshi joining in right now. Mayuresh, good afternoon. Do you think from an underperformance, now this tailwind that has come in from the rupee that makes IT stocks a little more attractive, or would you say that the overarching theme of a weakening rupee is not particularly good for the Indian market, so I won't even touch IT?
Afternoon, Mangalam. Now, obviously, I think it does aid and assist earnings flow sentimentally as well as technically to a certain extent for export-oriented sectors, including IT, as they will report a large part of their of their revenues, offerings and services in dollar terms. But to a large extent, again, Mangalam, I think a large part of that is hedged and pegged to a certain value. And therefore, I think the rupee depreciating might not mean that they get the full-blown benefits of the rupee against the dollar at 90, but partially thereof. And therefore, I think how long does this slide persist is also one thing to be noted. However, from a sectoral perspective, our own sense is that though large cap IT seems to be valued attractively compared to mid cap IT, the mid cap commentaries have been far more resilient and their earnings delivery have been far more robust compared to large cap IT. The expectations largely heading into Q3, largely impacted by furloughs, and Q4, where decision making will become a paramount factor for the sector as a whole. Mid-cap IT commentaries in terms of order wins, pricing, relative EBIT performance expected, and the scaling up in terms of their AI platforms is something that is aiding their accentuated valuations compared to large caps. So in our opinion, I think it does help them partially if it persists for a longer period of time as the quarter ends. But mid-cap IT selectively, stocks like Acofo, which emphasis persistent, where the performance was exceptionally good in Q2, might continue doing well, even if valuations might be a tad bit higher compared to the large cap.
Got that. Mayuresh, hi, afternoon. I'm just looking at Angel One on the screen right now. It's falling a little more, 5.5%. I don't know if you caught their update, the monthly business update. The stock was anyway down from the morning, and then this latest news has come in on maybe some sort of an entry threshold, some barrier for retail from getting into F&O. Your thoughts? Specifically on Angel One or anything else that, maybe on BSE as well, actually. Even that stock's under pressure.
Afternoon, Surbi. No, again, I think the monthly updates were again on the softer side, and what really has transpired since the expiries have not got curtailed to exchanges at one per exchange, I think it has really impacted volumes. Now, Angel One's large part of the client base is retail, and predominantly out of that, it is majorly F&O. So, to that extent, you're probably seeing that volume come off quite significantly. And with that, I think it's a cascading effect in terms of all numbers that are associated. Obviously, they are trying to diversify both in terms of their PMS offerings, wealth management offerings as well. But to a certain extent, I think a large part of the revenue pie still came in from F&O trading. And therefore, an impact thereof does have an impact in terms of the client additions and all other parameters associated with that. So at this moment, a neutral call on Angel. But for the platforms itself, I had been very, very optimistic on MCX, and that stock has performed exceedingly well. My take is that with the volatility that you're probably seeing in gold, silver prices, the expectations in terms of volatility also expected to come through in terms of natural gas, new contracts getting added, functionalities getting added, might actually aid revenues going forward.
All right, Mayuresh, what we'll do is we'll take a short break, come back, continue our conversation and track the closing of the market as well. There has been a firm amount of recovery, but as the Nifty moves towards that 26,000 mark, supply emerges again.
Welcome back. Down to the last 3 minutes of trade. So let's quickly throw it open to Mayuresh. Mayuresh, any ideas? Buy, sell? It's a confusing market out there.
No, we're still on the buying side, should we? So I think Vishal Mega Market, something that we continue liking. Our own sense is that the discretionary spending patterns will be even more profound as we head into Q3, Q4. And therefore, the format that they probably got in terms of apparels, FMCG and other FMCG, the margins that they probably posted in the quarter gone by, and the stability expected in margins, the commentary sounded very, very positive in terms of realization, volume growth, the calibrated expansions also working in their favor. Therefore, Vishal Mega Mart, from a rating rankings perspective, as we see it in Markets Bit India, looks attractive. One of the other stocks that we've kept on our watch list and on our radar is Apollo Tyres. Our take is that the MHCV segment is turning for the better. And both MHCV and NCV, as they turn for the better, the expectation in terms of tire volumes from the OEM segment should start picking up meaningfully. It's got a meaningful presence with 40-45% coming in from the tires. Sorry.
All right, Apollo Tyres, the stock's been doing well. Just as we move, the last tick on Sapphire Foods is something that we need to watch out for. The stock is ending at the high point of trade in an otherwise very wobbly market where the mid-cap index is down about 1%. Sapphire Foods, the street is expecting some sort of corporate arrangement between Sapphire and Devyani at some point. This has been the rumor for months now. So the price is telling you, let's keep an eye out on something that comes by. But let's wrap up on this edition of Closing Bell with the news of the market. In fact, let's start wrapping up. The Nifty going with a cut of almost 40 points, but it could have been much worse. There's a recovery of nearly 100 points from the lows, closing just closer to that 26,000 mark. The headline of the day obviously would be the rupee crossing that 90 mark to the dollar. The Nifty banks shown remarkable recovery led by the private sector banks. Public sector banks were still lower, and the broader markets out there, we had nearly 2,000 stocks